may surprise you to learn that Jim Cramer suggests selling Tesla stock to investors. Investors in Tesla stock are faced with a decision over whether to sell or cling on to their shares. You would not want to miss this one, as Cramer would never offer bad counsel. The EV company's third-quarter production and delivery figures fell short of analyst expectations. Thus, the stock is not performing as well as could be expected. But the Tesla community is certain that the stock will recover quickly. Jim Cramer, meanwhile, thinks that stockholders of Tesla should sell their shares at this time. American television personality and author James Joseph Cramer is better known by his stage name Jim Cramer. He is an anchor on Squawk on the Street and the host of CNBC's Mad Money. Cramer founded Cramer Berkowitz and served as its senior partner in addition to managing hedge funds. Cramer is best known for hosting the CNBC program Mad Money, which he signed on to host in 2005. The purpose of the show is not to preach to viewers, rather, it aims to educate them on how to think like investors and professionals. Over the last 10 years, the program's popularity has steadily increased, positioning it as one of CNBC's most watched investing programs. If for no other reason than the fact that they can be so entertaining, firms with loud bulls and fierce bears have interested me throughout my career. Cramer used to say, "Moo Moo developed a new function before we go on." An invaluable resource if you're looking to identify stocks that could move in the next few days or months is the industrial chain. It offers a thorough image of the trending. You can easily locate stocks upstream or downstream in sectors like semiconductors and EVs, which makes it easier to concentrate on specific industrial segments more rapidly. Additionally, since segments and industries are related, you can forecast price changes more quickly without having to read a lot of research papers to understand the relationships inside a single industry. In the description, a link 2019 saw the initial introduction of the concept of investing in Tesla by Jim Cramer's daughter. She chose to hire a Tesla while traveling from Oregon to Los Angeles. Cramer claims that although she had never driven a car before, she was taken aback by how much she enjoyed driving an electric car and how simple it was to recharge. It is the world's most enjoyable car, according to her. Although Cramer admits that his daughter was sold on Tesla, he maintained his doubts about the business and cited the high price of the stock. Speaking, Cramer's daughter stated she trusted Elon Musk, the CEO of Tesla. She added that because Cramer was too elderly to recognize the possibilities of electric vehicles, he had a prejudice against the company. "I want to get Tesla shares, and I'm going to stake money for Tesla." According to Cramer, she did indeed buy in and witnessed 10 increases in Tesla's shares. With her conviction, Cramer claims, she put in the effort and purchased it. As a result, Tesla gained a new convert in 2019 who was also a scathing critic. From an agnostic skeptic to an outspoken proponent of the electric automobile, Jim Cramer of CNN's Mad Money changes his mind. Mad Money host Maker's Company said he was now a strong believer in Tesla, a company he considers to be a battleground. In reality, Cramer stated in 2021 that Tesla is currently a very good investment. Strangely, Cramer declared in 2022 that he preferred Ford shares to Tesla stock. He claims that Ford is getting ready to overtake Tesla and take the lead in the EV industry. Rather, by 2026, Ford is reportedly going to start making about 2 million electric cars. According to Cramer, shareholders of Tesla should think carefully about selling their shares rather than holding on to them. Ford's statement that it would raise the yearly production capacity of its planned electric F-150 pickup truck to 150,000 units per year by mid-2023 appears to have played a role in Cramer's decision to go with Ford over Tesla. It is believed that this vehicle will compete with the highly anticipated Tesla Cybertruck. Jim Cramer actually took issue with the Tesla Cybertruck, which has not yet been produced. This is going to be Elon Musk's first failure, he predicted. Of course, this hasn't been confirmed yet, but the amount of pre-orders and reservations for the Cybertruck suggests otherwise. Other than complaints about Tesla, Cramer also suggested switching to a Ford EV. According to Cramer, Ford plans to create 200,000 battery-powered automobiles in addition to inverters and batteries. He asserts that Ford has historically outperformed Tesla in the pickup truck market and may do so even more going forward. Cramer claimed that Ford already had successful large automobile production facilities in place for a longer period of time than Tesla, which is going through terrible hardships despite growing its plants. James Farley, the CEO of Ford, never accomplishes anything without a profit. This makes sense because once Farley took over in 2020, the company's stock price rose. Farley, like Musk, intends to shift the company's focus from combustion engines to electric vehicles, much like Tesla did. In fact, Cramer predicted that Ford's future is bright this year and advised purchasing the electric F-100 Lightning truck, an American classic pickup truck. While it's true that Tesla will soon face fierce competition from other large corporations moving toward electric vehicles, according to analysts, Tesla is still at the top of its game right now, with other firms lagging far behind in terms of technology. That being said, Ford may be attempting to catch up with Tesla, but Tesla and Ford are in very separate markets. As far as AI advancements go, Ford is still a generation behind Tesla. This begs the question: what made Jim Cramer decide between Ford and Tesla? Some speculate that the general macroeconomic volatility, many experts forecasting a global recession, is one of the causes. As far as the market is concerned, Cramer is upbeat and thinks that if everything go properly, equities would definitely rise. According to Cramer, a variety of economic factors can affect investors' perceptions of the stock market and their choices about the purchase and sale of shares. Despite the impression that Cramer was just endorsing an EV firm that wasn't Tesla in a recent interview, it turns out that he hasn't endorsed any other electric vehicle manufacturer. Indeed, he expressed his opinion that Rivian is not the next Tesla. American manufacturer of electric vehicles and provider of automotive technology is Riverside Automotive Incorporated. In short, it seems that Jim Cramer believes Ford has a far greater future than Tesla. If you know where to look, you can always uncover equities with strong growth potential, according to Cramer. Sometimes it's as easy as enjoying a company's offerings and then doing some research to see if the stock seems like a good investment. According to Cramer, a company is more likely to continue producing high-quality goods even if customer demand changes if it develops an inventive product that you find appealing. Some, on the other hand, contend that Tesla has been among the best performers in the post-COVID bull market and that the company has experienced significant increases in capacity and profit in 2022. The auto industry is expected to see a significant cooling-off period as demand and prices are expected to revert after their phenomenal 2021 surge. Having said that, they think this is an excellent moment to cash in on your gains and bide your time for the bear market to end. Experts are satisfied with Tesla's commercial performance in 2022, despite the fact that insurance is still very inexpensive. In 2022, Tesla has performed a fantastic job of increasing output despite production hiccups in Shanghai. Manufacturing in Austin is expected to shortly surpass 1,000 cars per week, and Berlin has already surpassed 1,000 cars per week in manufacturing. The Inflation Reduction Act's credits for battery production should further help margins in the upcoming quarters, and expanding the Austin and Berlin factories will result in more cost reductions. With an LTM EBITDA margin of about 21 and a final catch-up to peers FEM, profitability has picked up significantly. In Q2 production, Tesla's cash balance increased to over $18 billion, indicating significant improvement. Despite supply chain difficulties, deliveries have increased significantly year over year. Additionally, Tesla presently has negative net debt and almost no insolvency risk due to the company's improved profitability profile. Despite its reluctance in recent years to issue additional shares, Tesla has a premium valuation that gives it a significant competitive edge over rivals due to its reduced cost of capital. Of course, this is a component of Elon Musk's halo effect. Cramer suggests selling Tesla shares, but ultimately it's up to you whether or not to do so. In this crucial decision, like the never-ending discussion about whether Tesla stock is cheap or expensive, your viewpoint is crucial. Experts themselves are divided on whether to sell or hold Tesla stock. To receive more updates on Tesla stock, subscribe to this channel.